What does the IRS actually say about our trust? I'm going to read you a letter that's public information. It's online for information and educational purposes only. You can make your own decision. Okay. This letter was written by Everett J. Myers, a senior internal revenue agent that spent quite a bit of time investigating the non-grantor irrevocable complex and discretionary spendthrift trust and actually purchased a trust, to my understanding. Rumor is, anyway. Compliance with the IRC. This memo concerns endowments to the copyrighted Spendthrift Trust. Generally, funds or endowments conveyed to a trust have no tax consequences to the party contributing the funds or endowments, the beneficiaries, or to the trust itself. Since the copyrighted Spendthrift Trust are within compliance with the Internal Revenue Service statutes, codes on estates, trust, and beneficiaries, and are acceptable entities, they receive employment identification numbers and file a Form 1041 as a complex trust each year, meaning they're not required to distribute assets. They must meet the compliance codes and filing requirements. Relevant code sections are Title 26, Subtitle A, Chapter 1, Subchapter 1, Part 1, Sections 59, 67, 543, 553, 927, Subpart A, Section 641, Section 643, Subparts A, B, C, and D, and Section 651, Sections 672, 673, 674, 675, 676, 677, and 678. Title 26, Subtitle A, Chapter 1, Subchapter 1, Part 1, Subchapter A, Section 643 defines applicable to subparts A, B, C, and D, clearly define and outline that gains from the sale or exchange of capital assets shall be excluded to the extent that such gains are allocated to the corpus of the trust and are not required by the governing instrument to be distributed to the beneficiaries. Deferring capital gains, very simply put. It further outlines that extraordinary dividends and taxable stock dividends are excluded as items of gross income constituting extraordinary dividends or taxable stock dividends, whereas the trustee, according to the terms and conditions of the trust in compliance with all applicable local laws and trustee acting in good faith, determines that such dividends are allocable to the corpus of the trust under the terms of the governing instrument and applicable local law shall not be considered income, deferring passive income from year to year. As you know, I have served for many years as a senior revenue agent with the Department of the Treasury responsible for the examination of corporate